Ladies and gentlemen, you are not going to believe this. Even though I'm on holiday, I have to say holiday so I don't annoy my Australian friends. Here in Australia we say holiday, not vacation. We need to talk about the latest report that just came out, and this is a bit of a head scratcher, just like the latest jobs report that came out that we already went over. So today, the latest CPI numbers were released in the US, and I think they're getting a bit creative, everyone. Now, what you have to know is they changed the way they do the CPI. They changed it again this year in January. But even bigger than that, what they did in the 80s was they changed it, and then they changed it again in the 90s. I'm just here on the beach, guys. Good morning for a stroll. But they changed it twice, and then they've changed it again. This is why you guys comment down below and say, I don't get it. I don't see how inflation is falling. Prices are still crazy high, and prices are still rising rapidly. And the reason for that is because it's completely rigged. They're completely cooking the books. So the new data we got today came out that headline CPI came in at 3%. This was 0.1% below market expectations. They thought it was going to be 3.1%. Also, core inflation. Here's the thing. The markets were celebrating that CPI, the headline number, was 3%. But what the Federal Reserve focuses on more is what is the headline number. What is core? And core came in at 4.8%. So core inflation, that's when you exclude food and energy, which is still going up very, very quickly, unlike they're trying to admit, even though gas prices have come down a bit and petrol prices, that's a good thing. So that's what they focus on more than the headline CPI. So I think the Federal Reserve is still going to lift interest rates at their next meeting, because when you think about it, core inflation of 4.8%, that's nearly 2.5 times the Federal Reserve's mandate of 4.8%. Now, a big reason why CPI came down is because, like I've been warning about the car market, used car prices plummeted, and when we look at the used car index, last month they fell by 4.2%. That's simply because with the new interest rates, people can't afford to buy a car, or they're putting off buying a car because, one, prices are still elevated since before COVID, since before the pandemic, and so they're not wanting to go do a big purchase, a $40,000-$50,000 purchase right now, when the cost of living is getting out of control. They simply just cannot afford it. So that was one reason why inflation came back down, but it is still, core inflation is still sticky. So that creates a risk that the Federal Reserve still may have to keep on going. But that's not all, everyone. What you have to know is, when, like I was saying earlier in the video, when you look at shadow stats, the way they used to record inflation in the 70s and in the 80s, a bit windy here, the way they used to record it in the 80s, inflation is still running at 12%, and then when they changed methodology in the 90s, if you go off that methodology, it's still running at 8%. So this is why you see these headline numbers of 3% and you go, there's absolutely no way it's 3%. It's much higher than that. So on to our next topic. This is creating a risk of, like what I've talked about, they'll cook the books, they'll start dropping interest rates. Why? Because the banks are on the verge of collapse. This is not me being hyperbolic, doom and gloom. It is a fact. I've shown you all the information, what's happening with deposits, with what's happening with commercial real estate, with the huge losses the banks are facing. Okay, so the Federal Reserve, they got no choice but to cook the books, because if they really had to lift interest rates to what they needed to be to stop inflation, they'd have to go to minimum 7%. Okay, and there's just no way the financial system can handle interest rates at 7% and staying there. Maybe, if they spiked interest rates to 7% for 1 month and then dropped them again, maybe you could handle that, but not keeping them there for prolonged period of time. So this is what I've been warning about. This poses the risk of a market melt up, and that's why I've been talking about you want to hedge against a possible recession or also a market melt up. Because when I do these predictions, I'm doing this based on free market fundamentals. We don't have a free market anymore. We don't have a free market anymore, everyone. The Federal Reserve, the government, they're completely cooking the books. And you know, we all know we don't believe China's numbers. Well, the US numbers are starting to become questionable as well. So what did we see happen today? I'll go ahead and bring up my notes here. That's right. We saw gold and silver absolutely skyrocket after this report. I think gold went up about $20 an ounce, was up around 1.7% last time I looked. But silver, even better, up 4.5%. Now, what I teach you guys, and when I teach you my courses, link in the description, what makes gold go up or down? Well, the reason why it's been struggling for the past few months is because when the dollar goes up, all commodities prices in the dollar go down. Okay, when interest rates go up, that is bad for gold and silver. But once the dollar goes down, like what happened today, the DXY dropped about 1.5–2%, completely plummeted after this CPI report. That makes commodities go up, especially gold and silver. So what also is going to happen with gold and silver, and like what we're seeing with the bond market, if we have a recession on top of the dollar going down, on top of interest rates going down, that interest rates going down, the dollar going down, that's enough to send gold and silver skyrocketing. But if we have a recession on top of that, people are going to run to a safe haven, which is what they do is they go to bonds, gold and silver. Now silver is a lot more risky, so I wouldn't recommend going all in silver. You definitely want to have a large proportion of your portfolio in gold and a small position in silver, because it is more speculative and it is based off industrial demand. What a lot of people get wrong in the investment space is they think investment for silver is the biggest demand. No, industrial demand is the biggest demand for silver. Okay. Now, what this leads us to, we're at a pivotal moment in history right now. We've had the fastest rate hike cycle in history. This is right, that's the fastest one. And remember, people say, oh, well, back in my day we had 17–18% mortgages. Yeah, you did, but your mortgage was probably 20% of what the mortgages are today. The debt now is 4 times greater than it was in the last rate hike cycle in the 70s and 80s. So going from 0 to 5% is a lot more painful than going from 5% to 10% because there's so much more leverage. So really, everybody in the markets are not sure what the Federal Reserve is going to do, what's going to happen with inflation. Are they telling the truth? They're really going to do what it takes to bring inflation down? Or are they bluffing? Well, according to the bond market, they don't believe the Fed. Well, I don't believe the Fed either. You know, when inflation was skyrocketing out of control and the central banks were saying, don't worry, it's transitory, I was saying there's absolutely no way it is transitory. And I didn't believe them when they were saying they weren't going to lift interest rates. So I was saying they're going to have no choice but to lift interest rates. And it's like what's happening now when they're, you know, acting big and tough. Oh yeah, we're going to stop inflation, we're going to bring it down. I don't believe them. If they were really going to do that, why did they skip this last meeting? Now, I think they'll probably do 1 or 2 more rate hikes, but I don't think they're going to bring interest rates to, you know, 6 or 7% like what they need to stop this inflation. So you're probably wanting to know, what can we do to hedge ourselves, protect ourselves, and also make some money on our investments? What I'm doing is not financial advice. Like I've been preaching about buying gold and silver. Look what happened today. Gold and silver skyrocketed today, outperformed the stock market, outperformed Bitcoin as well. But I do think in the long term, and it is happening year to date, Bitcoin is outperforming. So that's what I'm doing. Gold, silver, Bitcoin. This protects you against a market melt up. It protects you against the dollar going down, and it protects you against a recession as well. It's called the Trinity portfolio, something like, you know, I coined it, the Trinity portfolio, coined it, pun intended. Okay, so that's what I'm doing, everyone, to protect myself. That's my thought on the markets, what happened in the markets today. What do you guys think about this? Do you believe the latest CPI numbers? Comment below, down below, Thanks for watching, guys. This is my view today. Michael Cowan signing off. Peace.